Hey, fancy seeing you here. Welcome back to episode 32 of that live portfolio update where we're growing 50k into $1 million. This market has been a bit choppy over the last fortnight, but we did okay. Now let's jump into it before I have to change that next nappy. So we had some money to spend. We moved back into an old flame being grrr. Oh yeah, I miss this guy. We moved back in an average price of $1.60 a pop, giving us 31.25 shares. Hopefully he sticks around a bit longer this time. If you can remember back to Jan this year, we bought in here at 83 cents, and unfortunately, we ruled one just here at 74 cents before the absolute tear of a recovery. We could have had a two-bagger, but oh well, we're up here starting our journey again. Fingers crossed, iron ore keeps it up with their recent uptick, and we have a bit of a better journey this time. Okay, benchmark time. So how did STW fare this fortnight in comparison to our portfolio? It's black, guys, only just because of the massive uptick on Friday, where the portfolio was up 2.5% for the day. We're up 0.49% compared to STW, which was up 1.28%. Hopefully the recovery can follow into next week. So here's the list broken down. Well, as you know, we're up 0.49%. The start was Beach Energy, up 13%, and Grange, up 5.2%. Couple of hits being Yancoal, down 7.7, and that fallen knife at MHJ, it was down another 4.5. It's sad to watch Michael slip away. We need a miracle from this guy. So here's all last week's buys, holds, and sells. The ones that changed are as follows and why. So Bendigo moved from hold to buy as it closed above last month's close. Beach moved from hold to buy as it also closed above last month's close. Technically, Michael moved from hold to buy as it closed above last month's close of $1.02. But there's not much of a trend being set so early in this month, so I'll keep an eye on this one. And Yancoal, it hit some headwinds this week, so it moved from buy to hold as it closed below last month's close of $5.79. But please remember, guys, these are not recommendations. These are just what I own and the rules that I follow. So please do your own research and don't forget, get your car serviced. Alright, so since inception, we have a pure capital gain of negative 4.34%. It's always funny saying that, but you got to report it. The portfolio still has a dividend return of 4.74%. This gives us a total return of positive 0.4%. We're back in black, but nothing to brag about. That's 12 of the 15 target stocks now, guys. So just 3 months to try and reach that nice annual return. Eyes are on you, Yancoal, next week. Alright guys, today's nugget section is going to be on one of our stocks as per request from Fan Tom. We'll pull Yancoal apart, but as far as the scrutiny goes around the ESG, I won't dive into that too much. I'm just more concerned about the business, and I don't want to start any fights because you know me, I'm a lover. ASX ticker is YAL, Y-A-L. We'll do our deep dive doing the normal thing here. We'll have an overview of the company, the management, some numbers, and of course, some graphs. So buckle in. So let's start with the overview. Who is Yancoal? Well, as the name has coal in it, one would assume they have something to do with coal. Well, if you did, you are correct. And I apologize for all those that are politically ESG positive, but unfortunately, economics says we still need coal at the moment. So word for word here, Yancoal is a leading low-cost Australian coal producer in the global seaborne market, producing a mix of premium thermal, semi-soft coking and PCI coals for export. Now let's quickly break that acronym down. PCI, for those that don't know, and I admit I was one of them, it's the pulverized coal injection method, and it is used in the iron producing industries. The most remarkable feature of it is that steel makers can use cheap coal, replacing more expensive coke in the system, drastically reducing operational costs in the furnaces and the amount of wasted coke. Fascinating. So basically since 2004, they have been acquiring and building their coal empire with 11 coal mines across New South Wales, Queensland and WA. Looks like a couple have been winding down in operation, in which we'll investigate. They listed on the ASX in 2012, as we can see here. It's also listed on the Hong Kong Stock Exchange under 3668. I still need to look more into these dual listings as I don't come across them too much. Also, at time of recording, majority stake is held by Yancoal Energy Group. I hope I said that right. Currently at 62.26% of all the shares. So this bit's a bit of a mouthful, but I'll try and breeze through it. So the mine sites that are currently operating are Ashton, which is 100% owned in Hunter Valley, New South Wales. And we have Oster, which is also in New South Wales, 100% owned, but currently winding down since March 2020. Then we have Canby Downs, 100% owned by Yancoal's major shareholder, again Yancoal Energy Group, located in the Surat Basin, 360 kilometres northwest of Brisbane. Then we have Donaldson, 100% owned by Yancoal, located also in the Hunter Valley. Looks like this one has been winding down too. The Hunter Valley operations, or well known as the big HVO. I personally used to work on this site from time to time, which is pretty cool. For this one, Yancoal and Glencore are in a 51-49 joint venture in this operation. Then we have Middlemount, another joint venture, this time 50 each between Yancoal and Peabody Energy, located northeast of Emerald in Queensland. Then we have Moolarben. Yancoal has 95% stake in this joint venture, with 5% being Korean companies, located in the western coalfields of New South Wales. Then we have Mount Thorley Warkworth, another site that I have been on, and Yancoal has an 80% of Mount Thorley and 84.5% of Warkworth. Also, these are located in the Hunter Valley, 15 kilometres southwest of Singleton, New South Wales. Alright, we're almost there, guys, bear with me. Next we have Premier Coal over here in Collie, WA. It looks like Yancoal majority shareholder owns this one, and Yancoal manages on behalf of them. And then we have Stratford. Man, I remember working on this site at 17 years of age, climbing and changing these rollers out on these overlanders. That was a mission. The mine is located in Stratford, New South Wales, and 100% owned by Yancoal. And then last but not least, we have Yarrabee, which is located 40 kilometres northeast of Blackwater in central Queensland, Bound Basin, also 100% owned by Yancoal. I think I stuffed that word up, but I'm okay with it. Now let's move on to the management. Let's start with the CEO. Now I couldn't find the normal spill in the annual report, so I dug this ASX release out. So as the CEO, we have Mr. David James Malt, who was appointed 9th of March 2020. He's 63 years old and he is an experienced CEO and company director with a span of over 40 years. David was appointed as an independent non-exec, but had to stand down to take this role. Previous experience included being the MD and CEO of Centennial Coal from 2011 to 2017 and COO from 1998 to 2011. Prior to this, he had management positions at Joy Mining, RJB Mining and British Coal. He was also former chairman and director of the New South Wales Minerals Council, the Australian Coal Association Low Emission Technology, another mouthful, and also the Newcastle Coal Infrastructure Group and Port Kembla. David is a chartered engineer in mining and holds an MBA of administration and heaps of other fancy stuff. All in all, he's a pretty experienced young man and great to see the experience at the head of the company. David currently has no stake in the company, but they did announce that when they came into this position. Hopefully he'll increase this over time, both with the remuneration and personally out of his own pocket. It's always good to see a CEO do that. Next we'll do Mr. Bioche Zhang. Yep, I had to Google pronounce that one. Mr. Zhang is 54 years young and is from the Yancoal Energy Group side, where he started back in 1989 and held many senior positions since 2002. Then in 2012, he was appointed as a non-exec director of Yancoal and bounced up through both companies, where he now sits as the non-exec chairman and non-exec director of Yancoal's board since 2018. He's been involved in many of the strategic acquisitions and mergers for both the companies. Currently, he has a 0.02% stake in the company, worth just shy of 1.5 million bucks. Okay, that's enough of the dudes. Let's do some numbers. We're just gonna have a quick play with some cash in the business, as it's quite confusing in the raw numbers with all the past acquisitions and winding down of plants. So here we have the statement of cash flow. You can see top line, we had 4 years of negative op cash from 13 to 16, where the payment to suppliers and interest were just eating up the customer receipts. That's not good. Seems from 17 onwards, they really boosted their numbers though. Maybe from increasing their operation plans, but we'll look into it. One thing I'll probably look into here is there has been no tax paid in most of these lines. I wonder if it's because of the operating loss or because of the ownership structure of the mines. Nonetheless, it's intriguing that they didn't flow over from the P&L. Down here we can see a big purchase of a subsidiary in 17 and a quick dig, and I found that this was an acquisition of Coal and Allied, where Yancoal raised 2.5 billion for 100% ownership. Maybe this was a nice bump that started putting more cash in the top line. Here you can see the 3 bill from the proceeds from shares. Looks like they raised another 268 mil here in 18 to buy another subsidiary at 353 mil up here. At the end of the day, I love going through these statements, trying to piece the story together. I hope you're getting something out of these. Okay, let's play with the graphs. 5-year monthly first up. At first glance, you can see it fell off a cliff from July 17, and that was purely from the announcements of the acquisition that we discussed. On the day alone, they dropped 35%. They recovered a bit, but then they have been a top left, bottom right up until June 21 when they started to turn back up. Now let's check out our entry on the 6-month daily. As you can see, this has been a great climb for the stock with a bottom left, top right. Absolutely beautiful until our curse of entry hits. We moved in here up on the 18th of the 5th at $5.92 and everything was peachy until this trade hold hit on the 26th of the 5th. Intraday, the stock plummeted like 15%, but it did recover and closed 7.57% down. From what I can gather, the major shareholder is wanting to buy more shares at a discount to current price, which made some of the market freak and dump. Rumor has it though, the sale won't be going ahead, so hopefully the shares will recover and they'll stop flirting with my real one. Next week will tell us a better story. Boom, that time of the month again. Another 37.50 has hit the bank on the 22nd as per our trading plan. Just shy of the 5k investment, sitting at 4.6, but hopefully something will tip us over this month. I know Champion was going ex-dividend, but I don't think there'll be enough in it, but we'll see. Alright, so our cash account is now at $4626. So without $4626 in cash, plus our $84,875 in stocks, takes us to an overall value of $89,501, which is about a positive 4.88% total portfolio gain from last week. Yeah, I know, contribution saved our butt, but it's green. Well, I hope you got through your beer and enjoyed that episode. Tune in next episode for more not financial advice, and you all know the saying, keep healthy and wealthy. See you guys.